this is something I'm going to call this video basically the death of the US dollar. It's final. I mean, it's a done deal. Of course, if you saw the writing on the wall even a year or 2 years ago, you would have concluded the same. But this is just more proof that it's continuing that death of the dollar trend. This is something that the Webbot forecasted long ago, and as I see it play out, it's just amazing, because it's exactly what the Webbot said would happen to the dollar. So here's another fork to stick in it. U.S. corporations dump dollar for Chinese renminbi to buy imports. So the Chinese currency, the US dollar is being increasingly dropped as the currency for setting international trade. But perhaps the latest trend provides the most startling evidence yet that the dollar is doomed as the world reserve currency. Financial Times reported today that US corporations are using the Chinese renminbi to buy imports over 3 times more than they had the previous year. The value of the renminbi of renminbi payments between the US and the rest of the world rose by 327% in April this year from the same month a year ago, as more US corporations switched to using the Chinese currency to pay for imports from China, according to data from SWIFT. You know, SWIFT international payments, etc. First, U.S. importers can slash the cost of imports from China by agreeing to trade in the Chinese currency rather than U.S. dollars. Second, a recent surge in the popularity of a host of renminbi-denominated financial market instruments are making it easier for U.S. corporations both to hedge currency risk and to earn an investment return from the renminbi they hold. U.S. corporations are just following the global trend where the largest economies in the world are jumping from the U.S. dollar Titanic, so to speak. Last April, the world's 12th ranked economy, Australia, joined a growing list of nations that have agreed to bypass the dollar in bilateral trade with China. China, ranked second behind the U.S., also has similar agreements with Japan, Brazil, India, and Russia. Further, the BRICS nations appear ready to shake up the world order with the deployment of their own development bank, as reported today by Al Jazeera. After more than 6 decades of dictating development policy in much of the emerging world, the Western-led International Monetary Fund and World Bank may soon have some competition. But keep in mind, those entities are the New World Order's tools. That's their central bank of central banks, okay? IMF and World Bank. Now there's the rest of the world saying, we don't know if we like you guys being the only show in town. Well, now this New World Order is going to really turn out. It's not looking good for those guys. The IMF and World Bank also appear to be pushing for a global economic reset. We need to push the reset button. The world is still much caught in a crisis management mode, said Klaus Schwab, founder of the World Economic Forum, earlier this year. Also, a sentiment echoed by IMF head Christine Lagarde. It's only been a year since China formally called for a new global currency, citing similar concerns. So, the bottom line is, anybody who still thinks, oh, strong dollar, US dollar, it'll still be there, it's the world reserve currency, it's always been there, it's not going anywhere. You got part of the, the people in the club, the elitist club, telling you, yeah, there needs to be a kind of a global currency reset, and got a lot of issues out there, while simultaneously the rest of the world is saying, yeah, we're gonna go ahead and get up on China's currency and start using that to settle trade. Which is interesting, isn't it? because that was the role of the US dollar, global currency. If you wanted to trade anything, you should have stocked up on US dollars, especially if trading oil, because that was the agreement that all OPEC nations made with our government back in the early 1970s, that they will sell all oil, trade buy, sell, etc. oil for US dollars only. So that's kind of in a sense, you have someone forcefully lending you money, buying your debt at the same time, which is kind of odd. Now that, what is it, almost 40 years later or what have you, I guess from the time this agreement really took place, that it's all falling apart, and all these countries are out there sitting on US dollar debt, treasury bills. And we have the Federal Reserve, oh, we're tapering. Right now would be the time you would not be tapering quantitative easing. Right now would be the time that you put it on full blast, full speed ahead. More printing, more money, more money, more money. And yet they've tapered twice, and supposedly they're going to taper again. In other words, they're buying, over $80 billion per month. Printing $80 billion per month. Think about that for a second, that number. 80 billion per month, and this has been going on for a long time. They've printed an enormous amount of money already. So even if they do taper off, does it really matter? The money's been printed. And the flow of money, forget the actual term they use, but they showed how, like the Great Depression, the flow of money slowed way down. And that's not to be confused with the amount of money being printed. Okay, not the amount of money being printed, but the actual flow of money, which, in other words, the whole system, kind of like the video I did yesterday that talked about the guy that had, put $100 down to go inspect a room at the hotel that he wanted to rent, and while he was upstairs looking at the rooms, the clerk took the $100 bill, went down to the butcher shop to pay his bill that he was in debt behind on. The butcher took the $100 to go to the pig farmer that he was $100 behind. The pig farmer, etc. Then it went right back to ultimately back to the hotel clerk. The flow of money, how quickly money trickles into and around and throughout the economy. So that would be kind of like just business to business, person to business, consumers buying, then whoever sold those consumers products, then those products, the people or the company that has those products are having to buy things themselves, pay wages, all that kind of stuff. Those people who work for that company have bills to pay, and they also, not just bills, have to buy stuff, etc. So that flow of money from one person to the next person to the next person has slowed way down in recent times. Similar, again, to the Great Depression time when it slowed down also. So we're looking at, George Soros even. Let's not forget about him for a second. He's already got his bet out on, it's already done, that the S&P stock market is going to crash later this year, towards the end of the year. He's already made the bet. He's already got billions of dollars on that bet. This guy's never, ever, ever, ever made a wrong bet. And because of this particular short position that he's put on the stock market, the S&P 500, you only have a certain amount of time to act, okay? Before that short position has to be covered and you either win or lose. And again, George Soros, being an elitist who never makes a wrong move, was so confident that he got the short position like in February or March or somewhere around that time frame, I think. We only found out about it a month or two later because of reporting that's done later on. And it's delayed, obviously, but you get to at least see what happened. And, oh, he made a bet now for way later, in the, 8 months out, whatever, that the stock market's going to crash. Why would you? Couldn't you get in? Couldn't you get in on that about 2 or 3 months before it's about to happen? Like, you could still put a bet out there at that point, couldn't you? The answer is yes, but the closer you get to that time frame, if you start to see the market responding very badly, you couldn't go out probably at that particular time and get a huge, multi-billion-dollar short position going, because again, for every short position there has to be a long position. So because the fake stock market rally is going right now, investors are saying, man, this is absurd. All these last several years, the market just keeps going up, even when the worst data imaginable comes out. GDP, right, the other day, it comes out, we're minus 1% on hopes of getting like a tiny bit of a percent up, like a percent of a percent up, positive. Nope, it was 1 full percent negative. That's terrible news. The stock market should have shed a good amount of points on that day. Nothing happened. Stock market actually rose. And we have one more on either MSNBC or I think it was MSNBC, talking about how it's good. It's actually good that happened. It's actually good that we lost 1%, minus 1%. We posted minus 1% on GDP for the quarter. It's kind of like saying, oh, you don't have any money in your bank account and you have bills due? Yeah, that's good. Good. It's good news. What? Right? At that point, your creditors would say, oh, this isn't looking good. We better start sending out the papers to this person, the letters, to say, hey, will you settle with us? Because we ain't going to get nothing. Nope, stock market rallies. So because of this fake rally, there's plenty of people out there who have long positions on the stock market. So George Soros, being George Soros, and knowing exactly what's going to happen and when it's going to happen, because he's one of the guys that pulls the strings, he can go way out in the future, in advance of this happening, not into the future, way out in advance of the stock market crashing, get short positions, because there's plenty of long positions out there to counter his short position. And he's going to say, oh, roughly 8 months from now, the stock market's going to crash. Well, everyone else is thinking, right now, the market's looking good. And 8 months from now, I think the market's going to continue to rally, because it's been rallying for the last several years. On news that's good and bad, it doesn't matter. That market just keeps going, so I don't care why the market's going up. I don't care that it doesn't make sense. I don't care that the fundamentals tell me something's wrong. All I know is the market's going up, so I don't mind making a long position bet. But again, let's say it was 2 months before, D-Day, so to speak, on the stock market, and news is obviously not good anymore, and they can't sustain the rally, and regardless of the good news or bad news, they just, for whatever reason, they're getting ready to let the market go, so they have to pretend, make it look like the market's reacting to something, when really it's just them doing it. So the market starts shedding off points. We're losing biggest week in a while, in 3 years that the market's lost this much. We're still on a losing streak. 2 weeks later, it's not looking good. Now all of a sudden, there's not going to be a whole lot of people who are able to go in there and short the market, because there's not going to be a lot of long people, or a lot of people with the long positions at that point. They're going to say, no, I'm not playing that game. I'm just going to, either sit on the sideline or whatever. I'm not playing the long and short game right now. No way. So that's probably why George Soros did this way in advance. So again, this whole thing with China's dollar, they are becoming the single largest global leader, like the United States once was. Some people will still try to argue right now that we still are. We're still the best. Okay. It's kind of like being on the sports team. Yeah, my team's the best. Every team will tell you that their team's the best. Every religion will tell you that their religion is the right one. And yet we all know that that's not possible. You can't have every sports team be the best sports team when there's only one winner. Only one football team can win the Super Bowl, not two. It happens, one time, per season or whatever. So you can wave that rah USA flag all you want. As much as I'd like to be there waving it with you, because I live here and I'd like to support this country in that respect. The bottom line is, I can't, because I see what reality shows me. I see the real numbers of things. I see the fake unemployment numbers. I see everything. This huge lie, the fact that our government has just been taken over by this huge oligarchy of people that just have no interest whatsoever in the Constitution, in protecting your rights, in protecting your financial livelihood. They've allowed these bankers to just hand them a bill to pass and remove this legislation, remove this regulation, let our big banks become financial institutions so that we can bet and gamble on the stock markets, and then we lose that bet. Now we need you to print trillions of dollars to bail us out. When in fact there was already regulation that would have stopped all that was in place in the 90s, that got started getting picked apart in the 90s and throughout the early 2000s. More of it was picked apart till nothing was left, and then all of a sudden we have this massive boom in real estate that completely collapsed, caused Lehman Brothers to collapse. Oh my God, we need a massive bailout. These are too big to fail entities. So then they realize we are too big to fail, which means we can do what we want, and their government won't let us fail. So guess what happened? JP Morgan continued rigging the markets. Same with other big banks, too big to fail banks. They got busted. Settle out of court, settle out of court, settle out of court, admit no guilt, and continue playing the rigging game, ruining people's lives, causing people to lose money. Because again, every winning bet on the stock market or commodities market, whether you're betting on wheat or corn or energy or oil or gold or silver, for every bet that wins, which these banks I'm talking about won every single bet, for every winner there's a loser. That's the way it is. For every buyer, there's a seller. For every seller, there's a buyer. So whenever JP Morgan has a short position, that means there's got to be a long position countering that somewhere. And if they're right and they make money, which they seem to always do and never miss, then somebody else lost it. So if you're the one rigging the markets, obviously you can't possibly have a year where you don't miss any wrong bet. You don't make any wrong bets. All of them are correct. That is not even possible, statistically speaking, that someone who's playing on a free market that can move up and down, allegedly, by, the weather, so to speak, that'd be like predicting every day of the year, 365 days, exactly what the weather will be like in your town. From just slightly overcast to heavily overcast to, slight showers, heavy showers, rain, tornadoes, you name it, being right every single day of the year. It is statistically impossible, and yet these banks have done it. They're riding this horse until the grave. They are riding this horse until it stops. And it is getting very close to being stopped. Because, as I just read to you, China is becoming the number one. So we are going out the window, and if that horse is stopping, and you can see it in the future, oh my gosh, in the future it's going to be stopping, and as a matter of fact it's going to be soon, what do I need to do to prepare myself so I don't get taken down into the grave with this horse? Oh, I know, buy precious metals. That's the thing that will save you. And I don't care if we see a massive drop in the price of gold and silver one final time. I've already said this multiple times in the past, that the elite never, ever, ever, ever buy any kind of asset unless it has been destroyed in price. They don't buy stuff on the high ever. They never ever buy stuff even at a fair market price. Like today, well, gold and silver is a good price to be buying. No, not in the elite's eyes. That's way too high. The way they buy stuff is they destroy something, price goes way down, we buy it, then the price starts to go back up. And it just looks like a coincidence. Hey, they got in at the bottom. They were smart enough to figure out when the bottom was and got in. So can they push gold and silver down even more? The answer is yes, they can. They could give it one final hurrah before letting go of it and watching it explode. But as I've always said, I never would advise someone to wait and just see if that happens, and if it does, then buy silver. Because what if it doesn't happen? What if we see roughly right now is kind of the low, it's where it's going, and that's it. And then all of a sudden it starts the big rise. Could you imagine sitting there, oh my God, I don't have any silver, and I thought I'd wait on this one, and it never happened. Now silver's 30 bucks again. I should have got it when it was 19 and 20, and I missed, so now it hurts to see this. So I think I'll just wait and see if it comes back down again, only to find out that it doesn't. It's going way, way higher. Those of you who already bought silver and said, oh, I've already bought all the silver I normally would want, now I can kind of speculate, so to speak. So I think I will wait on the sidelines and see if they smash it one time, heavy duty, and then I'll buy just some more, like, little bonus silver. In that case, you can do that. So I'll be honest, if I had to pay the freaking IRS, I think I told you I made a mistake on my 2012 tax returns, a glaring mistake, and I owed them $1,745 or something like that. So that was my go get your last final bit of silver here shortly money that I had to pay. So now I'm gonna hope that they can continue letting the price stay low for another 2 or 3 months. Then I'll have my little reserves built back up, so to speak. Go get my final silver purchase. What would be great is if they did do this huge smashing very soon, because if that happens now, as I said, I am the first to admit it. I will use a credit card in a heartbeat. When the price has really been hit hard and I can acquire some silver at that low price, I'll do it, get a good sized purchase, and then pay the credit card back over the next few months. So I got my silver now. That's just how I roll sometimes, but we'll see. Take care.